last week I talked about some form of the rally, probably somewhere around here. So it's just sort of negated. So if we hover here, this is around 20. Yeah. So this is from last Tuesday. So at that point, I thought like, well, we could probably still rally until the big day rate hike from the Fed. So we can definitely see that there is no rally from here. Although we see that there's attempt to rally on this day, there's a hammer, and then followed by, well, sort of a failure reversal. So this is certainly is not bullish at all. In fact, the rally that we anticipate is sort of just fail. And when the Fed actually announced a 75 basis point rate hike, it sort of have a effect to push it up and then eventually just have a sell off. So from here on, that is a breakdown. So that is actually the downswing, the down move. So it's very sharp during this downswing and down move. And also you can see that, yeah, Nikki said the volume last week is also very high. Definitely, yeah, you can see that right here. So this is, there's an increasing of the volume. So there's a lot of the distribution. So a lot of the distribution and also profit taking. So if you just focus on the team, the focus team or the outperform group, the emerging team that I highlight, like solar, like the health tech, the healthcare, the biotech, and also the rest. I think majority of them just have a very bad week. So almost all of them just got hit badly. So right now, I would say that we sort of just lost a lot of the leaders. So although probably in the solar group, there's still First Solar and Enphase is still probably hang around there, still not yet breaking the bullish structure. But I think overall group is just looking quite bearish because they can't actually hold up the gain. So similarly to the renewable energy, although I think there is still one or two, is still hanging there, still quite resilient, but majority of them got hit badly. And health tech, I think it's very obvious. A lot of the rotation going on from there, where you see that the SWAV, Schwab, Lantis, they have quite a sharp sell-off. So a lot of the leaders take a big hit. That is certainly not a good sign, not a bullish sign. In fact, it's very bearish because we do get the rotation out from there, from the leaders. So this is certainly quite bad because without the leaders, without the emerging group, we can't really expect a bull run. It's sort of literally impossible to have a bull run at this moment. So if we only have the indices pull back sharply like this, however, we still got a lot of the emerging groups still hanging there, then I think we'll still be able to trade them. And also a bull run will eventually emerge. So when the index actually resolve itself out from the trading range or from the oversold condition. But right now, I think the bearish sentiment actually dragged down the leaders, solar, health tech, and biotech, and also the renewable energy. They got hit very badly. So this is certainly the bad news. So on top of the indices, we do get sell-off, and in terms of the leadership, or the leaders from the leading groups also get rotated out. So that is quite bad, quite bearish. So because they can't really hold up the gain. So unfortunately, that is the market. However, the good news is, so based on the past week, 1, 2, 3, 4, 5. Okay, so the past few weeks, we already see that is in an oversold condition with the increasing of the volume. However, in terms of the slightly bigger picture, the big picture, the slightly long-term trend, we're still within this trading range. All right. So if you look at the midterm election back in, I think, October, there is a very strong rally up. I think in terms of the current technical situation, we still need a technical rally. However, how good is the rally is really the key to really predict or anticipate the next movement. Whether it could turn this whole chunk and break this big structure, the next move will be critical. So last week, since this rate high bar, okay, the 75% rate high bar, and I think the real concern is that probably a lot of them actually expect the Fed will just stop around 3.5%, but I think they just spell out very clearly by end of this year is around 4.3%. So we're still going to see another probably 75 plus 0.5 or 75 plus 0.25 or 0.5. So another about 1% or 1.25% hike. So despite I think we already see some kind of the telltale signs that the inflation is probably under control. So, which we'll talk more about when we look at the crude oil. But back to this chart. So, if we look at this whole chunk right here, um, if we think about the midterm, well, midterm after September, like in October, they will have a very sharp rally and then pull back as a backup action, then start a bull run from here. However, based on the current move, it's way too sharp, and I think it just need to get tested. So definitely, I don't think that we'll get this sort of the up move and then break out the 43 or 42. However, we definitely will get some kind of the rally, but we still need to see some kind of the prolonged testing. So why am I saying that? Because there is tremendous supply right here that need to get tested. So at the moment, if we look at this S&P 500 futures, I just wonder, maybe if we use this as a selling climb instead of here, so it means that that could be attempt to stop the price, so which is a preliminary support, and then that could be a selling climax. That is a change of character. That's automatic rally. Okay, change of character, and then that actually defines the trading range. So either way, it doesn't really affect the trading range. This is still a trading range. It's just the way to label that, because if I think like this is the selling climax, that's the probably phase A, then that could be phase C, which I think we should get probably a prolonged trading range, because it's sort of in between 2008 and also 2011. So I just would like to probably adjust it to something like this. Then that could be the selling climax, and then we probably still in phase B. So if that's phase B, that means that it's still within a prolonged trading range, rather than, well, it's a phase C, then we're going to get a standard strength rally backing up and then to start a bull run. So if we get a prolonged trading range, it's still stuck within this around 3600 to about 4300, and in between there are a few more levels. So this is another level, this is another level. Okay, so it didn't really change the trading range. It's just the labeling issues. So if we really want to get like sort of in between 2011 and 2008, then I think we could see a prolonged trading range. Then right here, right now, we get an oversold condition. So yesterday was sort of a bearish day. So I think it has been very bearish for days. So almost every day it drops like 1%. This is 1.7%. This is 0.9%. This is 1.6%. Yesterday 1%. So almost every day like 1%. So this is just kind of ridiculous. But if we look at yesterday, something is different. So something's really different on yesterday. In terms of the overall price action, is definitely bearish. So there's no doubt of that. But in terms of the intent, so yesterday is the first day or the first session that it did not really close below the low. Okay, so it's sort of like within the body or within this range, the true range here. So that is the difference. So if we look at this, so here's a close, here's a close, here's the close, and here's a close. So the close did not really take out the low here, the shadow of the previous day. So that is the difference. So there's attempt to push it down with a ton of the volume. So look at the volume right here. So it's almost same as the previous day. So very high volume this 2 day, and also definitely on these 3 days as well. But it did not really close below. And on this day, although the spread is very big, but at least we see some kind of the demand tail right here. So means that there is attempt to stop on this day. So I think, what is it? That is, okay, 23rd. So there's attempt to stop on the 23rd. And then on the 26th, there is no commitment to the downside. At least it did not really show its commitment to close below the low here. Okay, so that is the difference. So first we see the demand tail. Second, yesterday it did not really close below the low. So those two are the sort of the bullish components. But apart from that, I don't really see anything else that is we need to be too happy about, to be too bullish about. So another thing is, this is definitely oversold. So that if you look at the channel, this is the channel oversold, this is a channel oversold, here is just touching the channel oversold again. All right, so I think we definitely need some kind of a relief rally, and in order for this to happen, which probably at the moment is up about 1.4%. So Nikki say demand is finally appearing. Well, there is definitely some demand showing up previously. So there's demand showing up here, there's demand showing up here. But look at this, the demand showing up here actually materialize, actually have a rally up until the CPI bar, but the demand showing up here is just sort of evaporate. Okay, so there's certainly demand and shortening of the trust, all sort of the signs to bet on a rally, but it did not really show up. So only this bar, and then no follow through to the upside, and then eventually failure with the Fed rate high. So anything can happen. So despite we can spot the demand here, we can spot the demand here, we spot the demand here, spot the demand here, we spot the demand here, spot the demand here. We also need to watch out for failure as well. So now there's demand right here. Attempt to stop. So there's stopping action. But we need the bull to prove itself. So the bull really need to prove itself. So how do it actually prove itself? So first, it need to overcome yesterday high. So I think that's very obvious. If you look at hourly chart, okay, so there's definitely structure. There's a structure. Okay, so far I think it's encouraging. So we got a kind of the good rally up, hitting the resistance, reaction, and now it's probably a attempt to break out. Of course, now it's a bit still early, 8:30. We need to wait until the market open, about 9:30, another 1 hour to go. So in order to have a rally up first, obviously you need to break above and come in above yesterday high in order to do that. And then second, I really want to see the biggest bullish bar. I want to see some kind of the change of character bar like this. Okay, change of character bar like this. So ideally, I need the bar to commit to 37.90. So I need it to commit above this bar. I need to take out the high of this bar in order to start a run, to start a rally. Of course, it could take like 2 days or 3 days. It doesn't really matter, but it definitely needs to take out of this level. So that is the relief rally that we can anticipate. And then I think at least it should test the breakdown bar or the Fed rate high bar here. So this is the breakdown bar. It needs to get tested. So it's quite a logical place to get tested and have a reaction. So first, we definitely need to see the level yesterday high and then take out and on this bar high, and eventually testing this rate high bar, the breakdown bar, and then we can probably anticipate another reaction down. So if this sort of the reaction is kind of normal like this or like this with a decreasing of the supply, I think that is still bullish, and we still can anticipate some kind of the movement to go up to test this CPI bar. So that is a bullish case. So we can anticipate with a decreasing of the supply, of course. And the bearish case is if we even fail to get above the level about okay, let's use a 3800, although the high of this bar is around 3783. So let's just use a round number 3800. If we fail to just come in above 3800, and we see that there's a lot of the rejection and ton of the volume, in spite of the volume, then likely it's going to go down from here and break down this level 3650 or 3640, and eventually it will just go lower to find its support. So I do get previous count from the point and figure. Previously, I think there's a 3650 which already hit, and yeah, I think I definitely still got a lower target. But if we just look at the vertical chart right here, this is a logical support level 32, and this is another logical area 3600. So this is definitely the zone that will get tested. It's quite a big area, 32 to 36. So I would say it's probably around, well, it's probably will use 3400. So if we project that, okay, something like this. So it could really go down and have another oversold before it can bounce back up. So that is sort of the bearish case that we can anticipate if it fail to have a rally up above 3800. So at least so far, this two leg down reaction is not as sharp as this June's reaction. So in terms of the magnitude, of course, this is the biggest down wave, right? The biggest down wave, bigger than here, and well, probably something similar to the previous down wave. But certainly at the moment, I think in terms of the breadth, if we look at, maybe let's quickly look at the breadth. Okay, market breadth. So okay, let's look at this. So this is the 50-day average. So S&P 500 stocks above 50-day average. So if you look at this breadth chart, which I also show you, I think this is the chart that I shared with you last time about the breadth thrust. So the breadth thrust actually hit 90%. However, it dropped significantly and now it's back below 3. So can you imagine that only less than 3% of the stocks within S&P 500 is above 50-day moving average? How bearish is that? So that's super bearish. So we got one here. So that is after that, that's back in June. Then we got a rally up. So let's see what happened for this week. And you can definitely see that during the COVID year, it sort of just hanging there for quite some time and then eventually got bounced up. So there's quite a few instances. Actually, it's just the major bottom. So it's actually below 5%. So that is the oversold of the market breadth is just hitting the extreme level. But ultimately, we still need to see the price action to confirm itself. So if there's really demand show up and it's oversold, we definitely will get a relief rally, a rebound. However, a lot of times, if you look at 2008, that is definitely the exception. Although we do get many instances, it will just have a rebound. But in 2008, oversold bearish sentiment can stay there for months, 6 months, in fact. So just remember that that could happen if it is really that bad. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.